What happens if crypto becomes the new money? What if one day, your money still existed, but banks didn't? Your paycheck arrives. Your balance updates. But there's no bank in between. No approval. No delays. No middleman. You send money across the world in seconds, and no one can stop it. At first, it feels like freedom. Until you realize something else has changed. The system that used to protect your money is gone. And now, the responsibility is entirely yours. Because if crypto becomes the new money, the world doesn't just upgrade, it transforms. For years, people have asked the same question. Will cryptocurrency replace traditional money? But that's the wrong question. The real question is, what happens after it does? What happens when governments no longer control the currency? When banks are no longer necessary? When money itself becomes borderless, digital, and completely decentralized? At first glance, it sounds like a revolution. But revolutions don't just create opportunity, they create chaos. And by the end of this video, you'll understand exactly how life would change, how people would win, how others would lose, and why this shift could reshape power itself. To understand where we're going, we need to understand where we are. Right now, money is built on trust. Not trust in paper bills. Not trust in numbers on a screen. But trust in institutions. When you deposit money into a bank, you're trusting that bank to hold it. When you use a credit card, you're trusting a network to process it. And when you use dollars, you're trusting the government behind it. That system has existed for decades. And for the most part, it works. But it also comes with hidden rules. Banks can freeze your account. Transactions can be reversed. Inflation can quietly reduce your purchasing power. And governments can print more money whenever they choose. Then, in 2009, something changed. A new kind of money appeared. No central authority. No bank. No permission required. Just code. At first, it was dismissed. Then it was ignored. Then it was laughed at. And now, it's being taken seriously. Because for the first time in history, money didn't need a middleman. Here's the first thing most people don't realize. If crypto becomes the new money, banks don't just shrink. They become optional. Think about what banks actually do. They store money. They move money. They verify transactions. Crypto does all three. But instead of a building, it uses a blockchain. Instead of employees, it uses code. Instead of trust, it uses math. This means you don't need permission to open an account. You don't need approval to send money. And you don't need a bank to hold your wealth. At first, this sounds empowering. Because it is. For someone in a country with unstable banks, this changes everything. For someone sending money across borders, it removes massive fees. For someone locked out of the financial system, it creates access. But here's where things get interesting. When you remove the middleman, you also remove the safety net. Because in a crypto-based world, there is no forgot password, there is no customer support. There is no one to call if something goes wrong. If you lose access to your wallet, your money is gone. Forever. If you send money to the wrong address, it's gone. No refunds. No reversals. This is the trade-off most people don't think about. Traditional finance is slow, but forgiving. Crypto is fast, but final. And that changes human behavior. People become more cautious, more responsible, but also more vulnerable. Because now, instead of trusting institutions, you have to trust yourself. And not everyone is ready for that. But the real twist goes deeper. Because if crypto becomes money, it doesn't just change how we store value. It changes who controls power. Money has always been tied to power. The entities that control money influence everything. Governments control monetary policy. Banks control lending. Payment networks control transactions. But crypto disrupts all of that. Because instead of one central authority, you have a distributed network. No single entity can print more of it. No single government can fully control it. And no single bank can block access. This creates a new kind of financial system. One that is global by default, borderless by design, and resistant to control. Imagine a world where anyone can send money instantly to anyone else on Earth. No exchange rates. No banking hours. No delays. Businesses could operate globally from day one. Workers could get paid instantly. And financial inclusion could expand to billions of people. But here's where it becomes even more powerful. Crypto doesn't just replace money. It programs it. With smart contracts, money can move automatically. Payments can trigger based on conditions. Agreements can execute without intermediaries. This means entire industries could change. Real estate transactions without brokers. Loans without banks. Insurance without companies. Everything becomes faster, cheaper, and more efficient. But efficiency isn't always comfortable. Because the systems being replaced employ millions of people. Banks, payment processors, financial institutions. If crypto becomes dominant, many of those roles disappear. And when systems change this fast, society doesn't always keep up. This is where the story becomes more complicated. Because a crypto-powered world isn't just opportunity. It comes with serious risks. First, volatility. Traditional currencies are relatively stable. Crypto? Not always. If your salary fluctuates 10% in a day, that creates uncertainty. If prices change rapidly, it becomes harder to plan. For crypto to become true money, stability would need to evolve. Then there's regulation. Governments don't give up control easily. If crypto threatens national currencies, regulations will increase. Some countries may embrace it. Others may restrict it. This creates a fragmented global system. And then there's security. Crypto is secure at the system level. But individuals are the weak point. Scams, hacks, phishing attacks. In a system without reversals, mistakes are permanent. And perhaps the biggest risk is inequality. Early adopters of crypto hold massive amounts of wealth. If crypto becomes the global standard, that wealth concentration could grow, creating a new kind of financial elite. Not based on institutions, but based on early access. So, while crypto promises decentralization, it doesn't automatically guarantee fairness. And that's something few people talk about. So, what happens if crypto becomes the new money? The answer isn't simple. Some people gain freedom. Others lose security. Some systems become more efficient. Others collapse entirely. But the biggest change isn't technical. It's psychological. Because for the first time in history, money wouldn't be controlled by institutions. It would be controlled by individuals. And that sounds empowering, until you realize what it really means. No safety nets. No bailouts. No one to fix your mistakes. Just you and your decisions. But maybe that's the point. Because every major shift in history comes with a trade-off. Freedom always comes with responsibility. And the future of money might not be about replacing banks, or replacing governance, but redefining trust itself. So the real question isn't whether crypto will become money. It's this: if it does, are people ready to handle that power?